Did you know that student loan debt in the US has surpassed $1.7 trillion? That's more than credit card and auto loan debt combined. But what does this mean for the economy? With millions of borrowers struggling to repay, consumer spending is taking a hit. Less disposable income means fewer purchases, slowing down economic growth. How does this debt crisis affect your financial future? Let's dive deeper. Homeownership is often seen as a key part of the American dream, but student debt is making it harder to achieve. Many young adults delay buying homes because they can't afford mortgage payments on top of their loans. This weakens the housing market and slows economic growth. If fewer people buy homes, what happens to industries like construction and real estate? The effects ripple far beyond just the borrowers. Starting a business requires capital, but student loan debt makes it harder for young entrepreneurs to take risks. With high monthly payments, many can't afford to invest in their ideas. This stifles innovation and job creation, two key drivers of economic growth. If fewer startups emerge, what does that mean for the future of American business? Could we be missing out on the next big breakthrough? Student debt doesn't just affect individuals, it impacts entire communities. When young professionals can't afford to move out, they delay starting families and contributing to local economies. This means fewer customers for small businesses and less tax revenue for public services. How does this cycle affect the long-term economic health of cities and towns? Could student debt be reshaping the very structure of American communities? The job market is also feeling the pressure. Many graduates take jobs outside their field just to make loan payments, leading to underemployment. This means wasted talent and lower productivity, which weakens the economy. If highly educated workers can't use their skills effectively, what does that mean for innovation and progress? Are we losing out on potential breakthroughs because of student debt? Retirement savings are also taking a hit. Many borrowers delay saving for retirement because they're focused on paying off debt. This could lead to a future crisis where millions of Americans can't afford to retire. If people work longer, what does that mean for younger generations trying to enter the workforce? Could student debt be reshaping the entire career life cycle? The mental health impact of student debt is often overlooked. Anxiety, depression, and stress are common among borrowers struggling to make payments. This affects workplace productivity and overall well-being. If millions of people are dealing with financial stress, what does that mean for healthcare costs and economic stability? Could student debt be a hidden public health crisis? Government intervention is a hot topic. Some argue for loan forgiveness, while others believe in income-based repayment plans. But what would widespread debt relief mean for the economy? Would it boost consumer spending and home ownership, or create unintended consequences? The debate is ongoing, but one thing is clear: student debt is shaping economic policy in ways we've never seen before. The racial wealth gap is also tied to student debt. Black and Hispanic borrowers often take on more loans and struggle with repayment, widening economic disparities. If student debt is disproportionately affecting certain communities, what does that mean for economic equality? Could addressing student debt be a key step in closing the wealth gap? What about the impact on consumer spending? When borrowers put most of their income toward loan payments, they spend less on travel, dining, and entertainment. This affects businesses and slows economic growth. If millions of people are cutting back on spending, what does that mean for industries that rely on consumer demand? Could student debt be holding back entire sectors of the economy? Higher education is supposed to be an investment, but is it paying off? With rising tuition costs and stagnant wages, many graduates struggle to see a return on their degrees. If education no longer guarantees financial stability, what does that mean for future generations? Could student debt change how people view college altogether? Some borrowers turn to side hustles just to make ends meet. Gig work and freelancing are on the rise, but is this a sustainable solution? If people are working multiple jobs just to pay off loans, what does that mean for work-life balance and job security? Could student debt be fueling the gig economy in unexpected ways? What happens if borrowers default? Loan defaults damage credit scores, making it harder to buy homes, get car loans, or even secure jobs. This creates a cycle of financial instability that affects the entire economy. If millions of people are struggling with bad credit, what does that mean for economic mobility? Could student debt be trapping people in financial hardship for life? So what's the solution? Should we rethink how we fund higher education? Should colleges lower tuition? Or should the government step in? The student debt crisis isn't just about individuals. It's about the future of the economy. What do you think? Drop your thoughts in the comments, and don't forget to like, share, and subscribe for more deep dives into today's biggest issues.